Have you ever felt punished for your financial success? In countries like the USA, Australia, Canada, the UK, and many others, the progressive income tax system is often seen as just that, a punishment. This video uses a story to explore whether progressive taxation is fair or flawed. Meet Alice, the dedicated teacher, Bob, the passionate entrepreneur, and Charlie, the tech whiz, all residents of Fairville. They contribute to the town's budget through a progressive income tax system. Alice earns $40,000 a year as a high school teacher. Bob makes $100,000 annually as a small business owner, and Charlie earns $1 million a year as a successful tech entrepreneur. In Fairville, Alice pays 10% of her income in taxes for $1,000. Bob pays 20%, so $20,000, and Charlie pays 30%, so $300,000. While Alice, Bob, and Charlie contribute different amounts, the progressive income tax system ensures that those with higher incomes pay a larger share. But here's the twist. Despite contributing the most, Charlie feels he's being penalized for his success. Critics argue that progressive taxation discourages high earners from working extra hours or investing, as they lose a larger portion of their income to taxes. This can potentially hinder economic growth and innovation. For instance, Charlie, the tech entrepreneur, might be less inclined to expand his business or hire more employees if he feels overburdened by high taxes. Visualize how Alice, Bob, and Charlie contribute through a progressive tax system. While Alice pays a smaller portion, Charlie contributes a larger share due to his higher income. But does this system create resentment and a sense of injustice? A progressive tax system can be more complex to navigate compared to a flat tax system, requiring more resources for tax filing and compliance. Bob, the small business owner, might struggle with the intricacies of the tax code, needing to hire an accountant to manage his taxes. One of the main criticisms of progressive income tax is that it punishes success. High earners like Charlie may feel they're being unfairly penalized for their hard work and success. They may believe that everyone should be taxed at the same rate, regardless of income. This perception of unfairness can lead to resentment and a sense of injustice. Additionally, progressive taxation can discourage people from striving to earn more. If high earners know that a significant portion of their additional income will be taken away in taxes, they may be less motivated to put in extra effort or take risks. This disincentive to work harder or invest can have broader economic implications, potentially stifling innovation and reducing overall productivity. The complexity of a progressive tax system can also be a significant burden. High earners often have more complex financial situations, requiring them to spend more time and money on tax planning and compliance. This can be seen as an additional challenge, as they have to navigate a more complicated tax code compared to those with simpler financial situations. High tax rates might prompt wealthy individuals and businesses to move to countries with lower tax rates, potentially reducing the tax base. If Charlie leaves Fairville for lower taxes, everyone loses. The town loses revenue for public services, impacting all residents. As the story of Alice, Bob, and Charlie unfolds, the progressive income tax system reveals its complexities and impacts on individuals and communities alike. It aims to reduce inequality and fund public services, but can it hinder economic growth and innovation?